let me read out the risk disclaimer for today's session. So this information provided in this webinar is for educational purposes only and should not be considered as financial advice. The content presented in this webinar is based on information believed to be reliable but not guaranteed is made as it is accuracy or completeness. Pure Prime and I shall not be held liable for any losses, damages, or expenses incurred as the result of the use of the information provided. Trading and investing in financial market involve a high level of risk, and it is possible to lose all of your invested capital. Before making any investment decision, it is important to carefully consider your financial situation, investment objective, and risk tolerance. All trading and investment decisions are solely your responsibility. Participants should be aware of the risks involved and only trade or invest funds that they can afford to lose. All right. This is the disclaimer. Okay, we shall start. So if you guys can see on the screen, today we will talk about the chart, and then today's particularly on the candlestick. I'm not sure how many of you have joined the previous session on candlestick, where we just briefly give a very simple introduction of what a candlestick and how to read it, and some very basic candlestick pattern. But today I found a bit interesting chart pattern that is more advanced, and I would say it's rarely used, okay, or you rarely see, especially in the forex market. Okay, though I just introduced to you guys, and then if you happen to spot it out, those pattern, then maybe in your subconscious, then you can tell what action you should take, or what direction probably you will go, and then you can take action very quickly and seize the chance to make profits, right? So yeah, these are the topics that we're going to cover, and then I think today will be a very quick session. So later on, if you have any question, you can ask me regarding the markets. If I can answer you, I would. And then if you guys want to discuss on the latest updates on the markets, then we can do so. All right. But we'll discuss about what what is candlestick today, and then some of the patterns that I come up with, and then yeah. Hopefully, at the end of the day, at the end of today's session, I hope that it will help you in your future trading. Okay. But first of all, I will still have to introduce you guys or briefly explain what is candlestick. Okay, just in case any of you are just very young in terms of trading, just came into the trading world, forex world, and then yep, I would say I think 90% of the trader out there, everyone is looking at a candlestick. Okay, but of course you do have other way of depict the price action, right? We have line, and then we have dotted, okay, many others. But I would say at the moment in the markets, candlestick will be the most famous one, right? Okay, so what is candlestick? I think it is from Japan. Okay, I think if I'm not wrong, it was used in the fish market, where the fishmonger mark down the price of fish. Okay, and then yep, this is it. So to put it simple, every single candlestick represent one time frame. So if you're looking at a 5-minute chart, then one candlestick is the price of that 5 minutes. If you look at 1 hour, then one candlestick represent that 1 hour. So in one candlestick, I have 4 things. Okay, we have the opening price, then we have the closing price, we have the highest price, we have the lowest price. So why we have the green and red? Okay, this is by default. Okay, of course you can have your own setting. You can have your own favorite color. But normally out there, we always put candlestick by default is green and red, where green, we call it the bullish candlestick, where the price gain can go higher, and the red is the bearish candlestick, where the price go lower. Okay, so how we can get the green candlestick? It is when the closing price go higher than the opening price. Does it make sense? Of course it does, right? Means the price is more expensive or even go higher. Okay, then It is the green candlestick. It's a bullish candlestick. And then we have the tail, right? We have the tail on the top. We have the tail from the bottom. Those are the lowest price within that time frame, and then highest price within that time frame. Okay, so you have to understand the very basic or the logic behind a candlestick, and then no matter later on, no matter what candlestick pattern that I share with you, then you can understand it better why it is happen. So for me, right, I understand it as behind every single candlestick pattern, that is human. There's a fight between demand and supply, fight between buyer and seller, and then before the end of that time frame, it will have the result of that candlestick, whether it's long, whether it's short, whether it's a doji. I don't know what you guys remember what is doji. Doji is about like a cross, so there's like no almost no body, and then with just the tail up and down, and then like the price is undecisive. And if you have a very long, solid body, it's mean, yeah, a lot of people buy and sell within this time frame. It's solid, it's good, which is I would say is a very functional candlestick for me when I look at it. Okay, so these are the basic knowledge or the basic logic behind the candlestick that you should understand. But today I'm not going to talk about briefly what is candlestick, but I'll just straight into it. What are the very special candlestick pattern out there that you probably maybe you should know, and then maybe after when you spot it, trade it accordingly. Okay, anyone heard of what is island reversal pattern? I guess no, right? Because it is very, very rare, especially in the forex market. But anyhow, let's delve into it. Okay, why? Is because island reversal pattern is something like you got a gap. You know what? You guys know what is gap? Gap is like there's no price in between. So normally when there's like, especially in the forex market, every candlestick that will stick together, right, with the opening price and then the closing price, every candlestick stick together. But gap is something happen. Let me give you an example. Okay, you guys know, like, for the oil prices, if oil prices we don't trade throughout the weekend, right? Because the market closed on Friday and open on Monday. Okay, so what if, like last time when we have the war, we have the attack from the Iran to Israel, that happened in a weekend, right? So you guys remember what happened on Monday when the market opened for gold and oil especially. So we have the gap, right? So it's mean that let's say if you gap up, it means that the supply of that particular asset cannot catch up with the demand. So there's a gap. So people like catch, much, because they want it desperately. The demand is so high where no matter what price, they will just get it. So we have a jump in the price. So in vice versa. So if there's like something not right, people want to dump it. So the supply is overwhelmed the demand. So nobody want that thing, and then everyone just want to throw. So we have a jump of price downward. Okay, and then there's a gap in between. So this is the gap. So an island is after a jump, no matter up or down, and then it's consolidate, and then it form an island. So I think if you want the pattern, this candlestick pattern to be more effective, okay, it has to be a multiple candlestick, because it is makes sense if you only have like 2-3 candlestick and then gap up again to form the island, a consolidation price range, and then we have 2 gap on the starting and the end. This is what we call an island, okay, in this pattern, okay. And then what is the logic behind? The logic behind is, like I said earlier, when there's a leap in the price, okay, a jump in the price, it means what? If you jump up, it means that the demand is very overwhelmed. People want to buy whatever price it is, and we have limited supply. But after a jump, it's consolidate. Suddenly, there's no more momentum. What does it tell you? Like, oh, suddenly everyone gone. And then after that, gap down. Go back to the previous low. It's been that, like, suddenly the bullish momentum vanished, right? Like everyone just changed their mind. or the market sentiment shift, and then everyone just got away. It means that there's the jump, the gap is no longer functioning or it be effective. Everyone just changed their mind, and then the sentiment changed. And from that moment, after you spot this island, okay, gap up and then gap down back, it is a good chance for you to enter the market, and where you can know that there is a trend reversal signal for you. And guess what? The beauty of it is, because remember when we gap up with an island, and then there's like a price range, it is very easy for you. I mean, easier lah. I cannot say very easy. Easier for you to set a stop loss, or you can do your risk management very, very well. How you do it? So for example, this one, the bearish trend reversal. Okay, on your the picture on the right. So you can basically set your stop loss over here. Okay, the highest price level, and then if you can enter over here, and then if the trend really go your way, which is a bearish reversal, and then you can TP by referring back to the previous support level, and then you can set your TP over here. It is the same for the bullish trend reversal. So after a downtrend, very long downtrend here, gap down, you think that wow, the bearish momentum is very, very strong. But after a gap down sideways, and then consolidate, and then jump back, and then wow, this is the trend reversal. This is you remember you came to a webinar, and then people share this with you. Yeah, and then you expect it to jump back, go back to the next resistance level. You can TP over there. And where you set a TP? The lowest level. You can set a, because it already tell you your the risk, or I mean the level that you're going to lose. Okay. Then you can set your TP over here. And then hopefully the trend will just reverse and then go all the way up. Then you can TP anywhere. Okay. So so this is the beauty of it, but I would say this is rarely you're gonna use it. I'm not sure any of you just trade on Forex. So if you trade on other things, especially shares, okay, that could possibly happen. Like if you trade on Tesla, if you trade on Nvidia, if they suddenly come out with the news, bad or good, sometimes you will have the gap, because we have the resting period. Whenever the market has a rest period, there's a chance for you to catch a gap up or gap down. Whether this is what we call. Okay, so this is island reversal pattern. So this is a trend reversal signal. Okay, remember that trend reversal signal. It just tell you that maybe there's a chance for a reverse. You can catch from the bottom to the top, or the top to the bottom. Okay, yep. And then next is the concealing baby swallow. Okay, this needed about 4 candlesticks to form this pattern. Okay, this is also a trend reversal signal for you guys, and I think it would be more often it will happen rather than the previous candlestick pattern. Okay, because in Forex we don't stop right from Monday to Friday, non-stop 24 hours. So hardly will get a gap, but this one mostly is going to happen. But I would say for me, if I cannot remember who just now used the scalping. Okay, when you trade very, very fast, I think if you trade in a very, very short time frame, it is very hard to use this candlestick pattern, because I would say the longer the time frame, it will be more effective to tell something about the price, the pattern, the trend. Okay, because for me, if the time frame is too short, there's a lot of noise. If suddenly people buy, suddenly people sell, it will affect the charting, the candlestick. But if you use like 1 hour, 2 hours, 4 hours, that will be more reliable for me. So if I want to have a bigger picture of a trend, I always go back to the daily chart or 4 hours to generally have a bigger idea that probably uptrend have more chance, or probably this is like a bearish trajectory, so I short, there's more chance. Then after that I go back to like 1 hour, half an hour, 50 minutes, and then to execute my trade. Okay, but yeah, go back to this topic, concealing baby swallow. Okay, how we understand this pattern. So I take the chart on the left as an example. So do you imagine previously it's like a uptrend, go up, go up, go up until this last 4 candlestick, continue to go up, solid bullish candlestick, green color, right? But later on, we have the fourth, the last candlestick, that still green, still bullish, but the fourth candlestick conceal, swallow the entire of the third, the second last candlestick. But remember, this is the uptrend. But remember, here it will be the opening price, and then here is the closing price. So you have to be, wondering why it started so low and lower than the previous candlestick, and it doesn't close much higher. So this entire candlestick swallow the second last candlestick in an uptrend. So what's the logic behind this? This is mean that probably that is an argument within that period of time. People start to argue that maybe not going to be so bullish, not that strong anymore. Maybe there's a change of trend. The supply is coming in. People are going to short, going to start selling. There's a pressure from there. But anyhow, the buying momentum is still there, and then we are able to close higher. That's why we got the fourth bullish candlestick. So why they call it this as a trend reversal pattern? It means that you have to think maybe the bullish momentum is already vanishing, ending soon, gonna change it. Maybe the fifth candlestick will be a bullish bearish one, and then from there you can start to catch the trend. Okay, and then it's the same, and then because we already have the highest level, and then we can enter at the end of the fourth candlestick. If you believe that there is the bearish sentiments is coming in already, you can enter here, and then you can set your stop loss over here. Okay, remember, every time we should do a risk management. It is very, very important, no matter you are a millionaire or billionaire. If you don't do your risk management well, you know all your capital will be gone one day. Okay, so this is extremely important. Okay, you have to set your especially stop loss. Okay, you have to be very, very disciplined. Okay, it is the same for the bearish trend. You can imagine I drop from here, drop all the way here, and then suddenly why it stopped dropping? Although we have the last candlestick as the bearish candlestick, still closed lower, but why is it as a opening price over here much higher than the previous candlestick? It's mean that initially there's a lot of people start to coming in and buy, and then think that, hey, change, they have the different decision, okay, different thinking. Say, hey, here maybe already at the end of the trend, of the bearish trend, maybe we can start buying from here. Already have a different opinion in the market. Okay, that's why we have the opening price that high, but after that at the end still close lower. So again, it's the same. We have already a stop loss level, which is the previous candlestick lowest level, and then we can enter, and then hopefully we can really catch a reversing trend, and then boom, and then you can refer back to the previous resistance level as your TP, as your take profit level. Okay, so this is the concealing baby swallow pattern. Okay, so moving on, is the cup and handle. That is very, very common. I think a lot of people here already know what is cup and handle, because the name tell it all. Because of the shape, it just look like cup and handle. Okay, I'm not sure whether you guys have trade Australian dollar, AUD, USD. If you have, I think last week or 2 weeks ago, we have a very a vivid cup and handle candlestick pattern. Okay, so by the name itself, and then also for this, it is very I would say obvious, and because it does take time to form this pattern. So when this pattern is very formed, it is very, very useful, very, very effective. Okay, so I think don't doubt it. Every time when you have this, if you if you spot this pattern, you better just maybe give it a try. Okay. Before maybe I'll just use the AUD USD chart to explain what is it. So if you can you guys tell? So maybe I should do it like this. Can you guys tell? So it's like a cup and then a handle. Right. I don't know any one of you never see a teacup before, but it's just like this, and we have the cup body and then we have the handle. And then the trend shall continue upward. So where you should enter? Maybe usually normally you will get the resistance level over here. I mean the previous high level, the previous resistance level as a reference. Then you can enter here. And where is your stop loss? Your stop loss should be at the lowest level of the handle, the cup handle. Okay, you always have the stop loss level, right? So this is the cup and handle, and then the logic behind it is the same, because we trade lower until the point, and then maybe when you fail to notice a trend reversal, and then it does reverse back to the previous high, and then guess what? Retrace. So when it retrace, we still wait, because we don't know, not sure whether or not you can go all the way back down, right? It can possibly go all the way back down. If this is happening, so this is not a candle, then we don't enter. We have to think again, reconsider. But then it's not. You just have a technical retracement, slight retracement, and then rebound back. When it rebound back, then yes, the entire cup and handle has already formed. Then what you know what to do. Enter. You can enter over here. And then TP1, TP2 depends on how greedy you are. What's the return that you love to have? Okay, you have TP1, TP2. And then here, the lowest level of the handle will be your stop loss. All right? Everyone understand? But we have mainly two types of cup over here. So this is something like the Australian dollar. Oh, maybe I should show you after that the trend afterward. See, uptrend. But of course, this uptrend is not very lucrative. It's not very profitable. It's just a very slight uptrend, and got hit by the bearish momentum again. But yeah, if you sometimes because this is like one example, you have to trade longer to tell the shift of the sentiment, things like that. Of course, you have to add on some other indicators like RSI and MACD, which we will be discussing next week. So stay tuned. We'll talk about RSI, MACD, and such. Okay, next week. Okay, you have to double check everything by the indicator as well. Okay. Yeah. So this has happened. We got it right after a cup and handle, and then we got an uptrend. But of course, in this case, it's not a very strong one. So yeah, mainly we have two types. So this one sometimes it's like it does go back to downtrend channel, and then after that it break above this downtrend channel, then you can enter over here and then hopefully go all the way up. Okay, this is one type, and then this second type is very similar to the AU pair, the Australian dollar and US dollar pair. Okay, we have liquidity zone over here resisting the price, and after that break above the liquidity zone, and then yeah, we can enter here, and then yeah, here will be the at the bottom of the handle. Here will be our stop loss level. Okay, so it's very easy, very simple, and then I think it's very easy to spot. Okay, and then very often it will happen in the forex markets or in the stock markets or whatever, gold, oil, okay, or even BTC, Ethereum, okay, or the crypto markets. Okay, it's easier to spot. Okay, and then because I say it take longer time to form this pattern. So when this pattern is formed, you shall able to spot it, and normally it does make sense. Why? Because it didn't it doesn't form a lower low. It can have a higher low. So it's been the entire bigger picture bullish trend is there. So the chance for it to continue to go higher is higher. Okay. Last one is the on-neck and in-neck candlestick. This is very hard to notice because it's just two candlestick, but it just sometimes when you are not confident with yourself. Okay, this one is just for reassuring your trade. Okay, so how we know this is I'll take the on the left one to explain it. So this one is a example that we have the downtrend, okay? Downtrend, and you already inside, you short already, you have a short position, you're already inside, and then go down, go down, go down, and then suddenly come this bullish candlestick. So when you are not very confident, what you do, you think like, is it a trend reversal? Should I take profit here, change my TP, or should I wait? Something like that. But then if it does form a on neck line here, it means that it does you have the bullish candlestick, but it or have the opening price over here, but it closed here, close at below the previous bearish candlestick. It means that the momentum is still not there. The bullish momentum is not strong. So if you want to leverage up, you can. You can maybe enter further because why? It just show you that the bearish momentum is still overwhelming, is still strong, and the bullish candlestick cannot close higher than the previous bearish candlestick. It means that the bearish momentum is strong. It shall continue to trade lower and lower and lower. So this is the pattern that is reassuring of your trend. Okay, it is very similar, vice versa. If you have a very solid bullish trend, go all the way up, and then suddenly come with a bearish candlestick, but the bearish candlestick not able to close below the highest level of the bullish candlestick. Okay, close but stop here. This is the previous bullish candlestick, but just close and stop here. It means that what? People start to take profit, some people start to sell, try to panic the market, but still more people to buy. Okay, so you should not, you rest assured, nothing happened, continue to go, enjoy your profit, things like that. Okay, this is the logic behind this pattern, just to reassure your trend. Okay, you shall not be not panicked by one bullish candlestick or bearish candlestick in between, because sometimes we do get like 4-5 candlestick. Okay, we did in your favor. Okay, 4-5 bullish candlestick or 4-5 bearish candlestick consecutively, but then suddenly come with another candlestick, then you suddenly panic like, what happened? Whether the trend reversal, whether should I TP here, whether should I stop loss here, things like that. Then if it's this pattern, then you should not be worried about it. The trend shall continue. But I think because this is just like one candlestick, especially for you guys, if you do scalping with just 5 minutes, then it is very common to get this kind of pattern. And for me, I think it is not very effective. Unless you are talking about an hourly candlestick, 4 hours candlestick, then it is more reliable. Okay, for this kind of pattern. Right. So yeah, these are the 3 or 4 candlestick pattern that I found. It's like more advanced, if you trade in the market for a longer time, and then you shall understand the logic behind the candlestick, and then when you spot all this pattern, you shall know what's the logic behind, what does it mean, what's the people behind it that make this chart. People, because behind every single candlestick pattern, there's a buyer and seller fighting, right? That's why I formed this candlestick. So behind this, what is the story that this chart trying to tell? Then you shall be able to know, right? So here come the very crucial, okay, regardless of what pattern, because I would say those candlestick pattern is like a shortcut, it's like a hack for you. It's like you don't need to think. When you see this candlestick pattern, you should know how you should react towards it, how you should take what action you shall take with that candlestick pattern that you spotted. But if you understand the logic behind every candlestick, okay, then you understand the relationship between the trading volume, and then the relationship with the supply, the support and resistance level. And I will say it is more effective if you use it with the use it with the candlestick pattern. Okay, that will be better. So it is very important use it alongside with the resistance and support level. So a lot of people, you know, they got very confused that resistance level, support level is a line. Of course, it is a line just for you to set your TP and stop loss, because you have to have the very specific number to key into your order, right? To set your TP and stop loss. But it often, you know, in the market, you know, it's not often just a line, but rather that there's a level of it. So candlestick, and then you have to use it with the resistance and support level to be more effective. So for example, you have to always ask yourself, how is the candlestick look like when it approaching the support and resistance level? So, you know, normally, what does it mean when the candlestick go beyond a resistance level? It is the bullish signal, right? But what if the candlestick is very indecisive, very small, keep touching it, like break a bit, they don't break? You know, it means that the momentum is not strong. It is the same is when it drop all the way to the support. When it near to the support, suddenly the candlestick become very small. Again, every trader in the market become indecisive, don't know what to do next. Then, you know, people start to, you know, have no idea, indecisive, what to do next. And then you shall know the bearish momentum is ending. Okay, so yeah, again, it's like a momentum loss. So it's the momentum is lost when approaching the stop loss on resistance level. Okay, this is the thing that you should pay attention at also, okay, by referring to the trading volume, by referring to the shape, the size of the candlestick, okay. And is the candlestick close above the resistance level or close lower than the support level? Okay, normally the candlestick will have like a very long solid one and a short tiny one. So normally when the candlestick is very long, solid, it means that people, the price is very confident. But if you spotted those like a dodgy one, very short body, then you know, this is not a very confident price already. People start changing their mind, okay, and the trading volume. So these are the four questions that you should always ask when you look at the chart itself, the price chart. Okay, so I give you this example. See over here, all these tiny dodgy candlestick when it approaches the resistance level. Okay, remember I say a level is the resistance and support level is often not a line, but rather a zone, like a range, a small range. Okay, so when it approaches here, it means that the momentum is lost, and then you see, look at the trading volume, it's gradually going down. And then here, maybe there's like a trend reversal signal for you. Okay. But if you look at on the right, where you see a very, very confident candlestick approach here, and then it is if you compare, right, it doesn't look like this, all these tiny candlestick, very indecisive, and then lost in momentum, lost in the trading volume. But here the volume still here, and then, you know, after this this candlestick, very long solid bullish candlestick, just break from the above. It just tell you that the market is very confident, all the trader inside is very confident, then you should follow. This is it. So this is the logic behind every particular candlestick pattern. It's not just like you know, you don't sit there watching all the price action, price chart, and then you just spot one cup and handle candlestick pattern. No. But if you understand the logic behind every candlestick and the relationship between the support and resistance, you should know what does it mean. Know the logic behind what the people are thinking, you and I are thinking. Maybe sometimes, I don't know, when you are trading gold, I'm also trading gold, and then I'm thinking that, oh, maybe it's the bullish one, then you think it's a bearish one, and then we'll fight. So you win is because if you following the majority. If the majority people think that is keep going up, and then you open a long position, then you win, you make profit. But you yourself thinking that, oh, there's the trend reversal, we have to start to short. But the rest of the people are thinking that, whoa, still have room, all the room here to grow, to go up. Then you're losing up. You hit the stop loss, then yeah, you lose up. So yeah, this is the logic behind every candlestick pattern, right? So here come to the last slide for today, the key takeaway for you guys. Just you have to know yourself, each candlestick tell you a story. Okay, it's not just the candlestick itself. You have to understand why the opening price is here, why the closing price is here, why the opening price between the opening price and the closing price have a huge gap, you know, a very solid long one, and then why is it the highest levels go so high but suddenly close very low, meaning the tail is very, very long. Why is come all the way down? Why? You have to always ask why. Is it very indecisive? Is the market changing their mind? Okay, and then use the key support resistance area. Okay, like I say, a zone, a gap. So it's not a level aligned. It's never aligned because you and I thinking differently. Okay, taking an example, like the goal. Maybe my support level is 2310, but your support level is 2300. So we have like a $10 in, you know, in the zone. Everyone have a different thinking, have a different mindset. And then maybe you are a bit tricky and then say, oh, my support level shall be at 2990, not 2300. No, 2290. You're a bit tricky. You want to have a lower support level because you want to trick other people. Okay, then that's the gap. That's the, you know, a different opinion that form a range over there to be a support or resistance level. Okay, it's never aligned. Aligned just for you to key in your order, your stop loss order, your TP order. Okay, and then very important also, we have to take the trading volume into consideration. Okay, when the market is confident, you can definitely tell the trading volume will be high. Okay, very solid, strong. But when it comes to indecisive, no one knows what's going to happen next. Or when people start to have doubt in this bullish trend example, start to have like gradually lower and lower trading volume. You think, oh, are they start to want to, you know, consider a change in mind, want to have a short, you know, want to have a turnaround, a U-turn for a trend. Why suddenly the trading volume is not there? Okay, things like that. You have to, you know, behind every pattern, behind everything, there's a human at the back. Okay, you and I are the one that form the candlestick, and many people out there. So we definitely want to be the majority party to make profit. Okay, there's no one is right or wrong. It just depends on whether or not you are the majority or the minority. Everyone thinking that the goal is shooting up, and you yourself think that the goal is going down, then you lose out. But everyone is thinking the goal is going down, and only me is thinking the goal is going up. I'm going to lose out. Just have to follow the majority. Okay. Right. Yeah. So, again, you have to know the very basic logic behind the candlestick. Use your support and resistance very well. Okay, with the candlestick pattern. Even the single candlestick pattern itself, whether it's a doji, whether it's like a hammer, okay, whether it's a very solid long one, right? And then also the trading volume. Okay, how many people form one candlestick? It's like 100 people that form this candlestick, or just 2 people form this candlestick. That's a huge difference. Okay. Yep. Here come to the end of the our session today.